Hey, this is Sid from Elliott Wave Plus, and the Russell 2000 yesterday made a new all-time high. I'm showing you the monthly chart on the Russell right now, and it just on an intraday basis yesterday made a very slight new all-time high above the prior all-time high that was back in August of 2018. So this new development has brought about some additional reflection on where we might be on an Elliott wave count on the Russell 2000 right now, and that's what this video is going to be about. Um, Starting with the long-term monthly chart on the Russell, the low in March of 2009 is fairly universally considered a supercycle wave 4 low in the Elliott wave community. So I think from the high that occurred back in the year 2000 down, um, we had a move down through late 2002, pretty strong move up uh, into the middle of 2007 on the Russell, and then this five wave structure down into that March low of 2009. And I'm now labeling that as a running flat. So the low in 2009 was not quite as low a low as occurred in 2002, but the internal subdivisions do support this count of a supercycle wave 3 top in the year 2000, 3 waves down for wave a 3 wave move to the upside for wave B. Typically, I wouldn't label that as a wave B. It's just too large of an expanded flat. But this really, because of the internal subdivisions, seems to be the best labeling now. And then a 5 wave down structure down into the March 2009 low, supercycle wave 4 low. So as long as we start with that low and that labeling, we can start looking for 5 wave up structure from the 2009 low next. And as you can see, it's well along its way. And we have a pretty clean, clear wave 1 and 2 and a wave 3. That was that high in 2018, third quarter of 2018. An ABC down for a wave 4. That wave 4 moved down and almost invalidated, but did not. It did not move down into the price territory of Burgundy wave 1. And so far we have 1, 2, 3, 4, and we would be in wave 5 to the upside now on the Russell. So the question is it finished moving up in its fifth wave? And I would say probably not. It just barely made a new high so far. Typically, a wave 5 would move up and to a target where wave 5, in this case Burgundy, would be equal to the net traveled of 1 through 3, actually 3 here, 1 through 3 times 0.618. Well, that target is way up there at 2639 on the Russell. And then the other possibility would be that, it is a fifth wave, and fifth wave sometimes can even truncate and not even make a new high above the high of the third wave. In this case, now it has made a new high. And so in order to set a target for the end of this 5 wave up structure here, which I'll be labeling as a cycle degree wave 1 up from the supercycle wave 4 in 2009, to be followed by wave 2 and then on up from there. But need to look at the internal wave structures on the way up from this low right here and look at the Fibonacci relationships and see if we can determine when this move to the upside, when and at what level it's likely to stop going up. And the count to the upside has been A little bit difficult because it got started with several chops right in a row, and on the daily chart, I think I've figured out a way to label those that will allow this thing to be a five-wave, non-overlapping, unfinished impulse, five-wave impulse to the upside from that low in March of 2020. Um, so today's date is November 10 of 2020, and it was just yesterday that we got a slight new intraday all-time high. So there's a low target down here where Burgundy wave 4 would be only 0.382 times the net travel to 1 through 3. That would be unusual for it to be that short. It's more common for it to be longer. And so, but maybe that target way to the upside here is just a bridge too far for the Russell, the small caps. After all, um, theoretically, the reason for this plunge right here was the COVID outbreak, and frankly, we're still in a COVID outbreak, and it's getting worse right at the moment. Yesterday's spike to the upside did occur on news that Pfizer came up with a 90% effective, uh, essentially flu shot uh, for COVID. And it's still early in that, so there's nothing definitive there, but it's a very good sign. It's the first time we've seen the possibility of a truly effective vaccine against COVID. That happened just yesterday. That news. The only problem is it's going to take them quite a while before they can bring it out to the public and start, um, you know, getting people some shots that would keep them from getting COVID, or would have a 90% chance of keeping them from getting COVID moving forward. So let's move to the daily chart, because then we can start looking at internal wave structures on the way up, and you'll see why I have labeled the top yesterday as likely the end of a third wave up from the March low. So moving into the daily, um, there was a lot of overlapping choppiness to get started on the Russell on the way up from that low in mid-March of 2020, and but I think it looks good with the current labeling, and it makes sense in a number of ways. And that is that we have a black one and a black two, and then they have a third wave going on, and so we have a blue one, blue two. Then within blue wave three, a pink one, two, three, four, five. The wave four did not overlap into the price territory, pink one there. So that would be the end of blue wave three, or the wave three of three. And you can see the RSI often peaks at the wave three of three. And then I believe there was a triangle here for wave four. And you'll notice that when we draw a trend channel, connecting the extremes of wave two and wave four, and put a parallel copy at three. Russell did move on up through early August, but then it broke down out of the channel. But then it found a way to find another new high, and then now it's found another way to find a new high. But it broke down out of that channel quite a while ago, and each one of these legs appears to be potential ABC. So I think what's going on is up from the end of this blue wave four triangle in July, on July 9th of 2020, we got an ABC up for wave one in pink of an eventual ending contracting diagonal. Then a deep wave two of the diagonal, a quick kind of unidirectional wave three, then an ABC down for wave four. Wave four did overlap down into the price territory of the wave one of the diagonal. And then the move up that we've seen here in the early part, the first half of November, very strong move, including that big spike that occurred yesterday on November 9. But as long as the Russell doesn't continue to move substantially higher, that could be a throw over in the completion of a blue wave 5 that started here and was a diagonal, 1 in pink, 2 in pink, 3, 4, 5, a throw over. And one of the reasons why I think Black Wave 3 is ending now, about now, instead of back here, which is what a lot of Elliottians were labeling it as ending here or potentially even back here, is because um, if you uh, solidify this in your mind as a black 1 and 2, the first thing is that wave 2 was fairly normal. It was about a 0.618 retrace of the wave 1 in black. And then you would look for a wave 3 in black that was 1.618 times the length of wave 1. So that target on this Semilog chart would have been too low. There's the 1.618 target right there. But there's another target right up here that is 2.618, um, where the wave 3 in black will have hit a target where it is 2.618 times the length of wave 1, and that is also a very common, probably the second most common target for the end of a wave 3. So that level was at 1748.52, 1748.52. So I'm going to add that Fibonacci target onto the chart here. And we'll call that wave 3 black was equal to wave 1 black times 2.618. And notice that that's that thin black line. You can just barely see it right there moving through here. And the high yesterday in the Russell was 1745 and some change, 1745 and some change. And once again, I'll remind you of what that level was, 1745. 1748, only 3 points, Russell points, shy, the move up yesterday, of that very, very common target for the end of a fairly long wave 3 in black. So that easily could have been the end of black wave 3 in the Russell. Notice I'm not trying to call this a finished structure to the upside, a finished 5-wave structure to the upside, because there just aren't enough subdivisions yet. And not to mention that target is good for a wave 3, not necessarily a wave 5. So now I would expect a wave 4 in the Russell. And I've got a Fibonacci target for the end of wave 4 down here at 1429. That would be a typical 0.382 retrace of the entirety of black wave 3. So a 0.382 retrace from this level up to this level. So it would be a pretty sizable correction that would be coming next. And that correction would be, to put it in perspective, a approximately an 18% correction that this main wave count is calling for next. So if we're going to get a wave 4, that's the best target for it. A lot of times a wave 4 will come back to the extreme of wave 4 of one lesser degree, which is right here, but that would be a little deeper than a 0.382 retrace. And then there would be a wave 5 to the upside, and the way I've got it drawn is up into mid-February. and up to the top of the channel that's been containing the price action ever since the 2011 low. That's this burgundy channel that you can see here. So that would be up to that level up there, around 2000 on the Russells. Matter of fact, on this one, it's up to about, yeah, 19, somewhere between 1950 and 2025 would be the expected eventual high in mid-February of next year. So where am I getting these dates? Well, I use a combination of Hurst cycle analysis and another cycle tool that is available at the Foundation of the Study of Cycles website. It's only $100 to join there, and you have access to the cycles tool that would give you a way. It gives me a second kind of double check way to see if my two different cycle analysis, computer generated cycle analysis tools are in agreement or not. So that's that tool at the or at the Foundation of Study of Cycles has been expecting downward movement from late October all the way into early January of this year, whereas Hurst cycle analysis has been expecting downward movement from late October through late November next. I think it's probably going to move down kind of right in the middle of that window, and that's likely going to be a 40-week cycle trough at that time. And the troughs on Hurst generally run, so this was a 9-year cycle trough. So they run in 18-month sections. And splitting that 18-month section right in half would be a 40-week cycle trough. So I think it's likely here, not here. And then the 40-week cycles are divided into two 20-week cycles. So I think the 20-week cycle trough is at the end of this triangle here. And then the next, each 20-week cycle is breaks down into two 80-day cycles. And this is almost certainly this low right here in late September, an 80-day cycle trough. So you move about 80 days forward from there, and it really puts the expectation of the next 80-day and 20-week and 40-week cycle trough all in the same spot. And when I do a Hurst analysis of the Dow Jones Industrial Average, it is expecting downward movement from about now down into about late December, and then a move up into mid-February. So, but this, I wanted to show this to my subscribers and my potential subscribers, and I think it goes a long way to explaining why this idea of this diagonal here goes a long way in explaining why the market has continued to chop its way higher, even though it fell out of this trend channel back here some time ago. A lot of times wave fives will fall out of the channel, but they'll continue to chop a little bit higher until a 5-wave structure is finished. So it looks like we're right there for a potential finish to this diagonal. Also expected about now, actually expected in late October, but if it's a little late in forming, in my opinion, was a 40-week cycle peak, a 40-week cycle peak. So there was a 4.5-year cycle peak here. Then we move forward to a 20-week. This would be a 40-week. This would be another 20-week cycle peak over here in mid-February. So I wouldn't be surprised to see the market take a breather now and correct back, but I expect the correction to be a corrective ABC structure, most likely. If we are going to see a black wave 4 here, we can look back at the black wave 2 at the structure of it and try to determine that based on the guideline of alternation, what the wave 4 would be. And the odd thing about this wave 2 back here is it appeared to be a 5-wave down impulse at the time. And so that had to be a complex WXYXZ, in my opinion. So we may not get a complex correction here, like a WXY or a WXYXZ. So a zigzag, potentially a triangle, a flat would also be possible, but not a complex correction. So I've drawn it as a potential zigzag to the downside. So what happens after the high in February? Well, Hertz suggesting that the next 18-month cycle trough is due in mid-July of 2021. So once 5 waves up from the not only the 2009 low is complete in February, based on this roadmap, and that would also be the end of 5 waves up from the March 2020 low, then there's likely to be a longer lasting correction from February of July of next year. So there is my newest wave count that incorporates the slight new all-time high into the count, and also explains why I believe why the market has been able to continue to move higher, even though it's chopping and overlapping. I do have an alternate, and that is that black wave 1 was here, 2 was here, black wave 3 was short, and there's the end of black wave 4, and now we're getting a blue 1, 2, 3, 4, 5. And while I find that to be a decent alternate, it really doesn't work well with what the cycles analysis is currently suggesting. So that's it for this quick video. Just wanted to get this out and let everyone know what my main count was now, main and alternate on the Russell 2000. See you soon. Bye.